Last week we were talking a lot about Jackson Hole, Wyoming, which is the symposium that goes on with these economists from all over the world, the Bank of Japan and Bank of England and all these Fed governors. They come to Jackson Hole and they sit around and drink cocktails and talk about the world of monetary policy. And we were very much looking forward to Friday afternoon when Chairman Powell was going to speak.
Can we wind the clock back? Because he doesn't?
Yeah.
Right?
Well,
Because it was quite an impact on Friday.
He did, and after he spoke, the market reacted violently. We ended up going down more than 800 points on Friday, and that certainly sent a shiver in the markets. And I think one of the reasons that has happened, Todd, is because Chairman Powell really put a more hawkish view on the Fed's policy.
Yeah, that's absolutely right. And, there was the expectation that was going to happen, but at the same time, some were talking that this was a do-nothing type Jackson Hole and that nothing could come out of it possibly. But the greater consensus, I thought, did expect a little more hawkish tone and a pushback on that potential pivot next year. We didn't buy into that for a number of reasons I could go into, but it certainly pushed down the market.
So let's talk about that. So the Fed has got to try to get inflation under control, and it certainly became unanchored. I remember 1 year ago, Todd, then when they were meeting at their annual meeting in Wyoming, they were talking about inflation being transitory, and you and I talked about that and said that certainly doesn't make sense, and if they don't get control of it, it would become unanchored, and that is exactly what happened. I saw some stunning numbers today in Europe where, listen to this, Germany's CPI report is above 30%, and that's just shocking, and even in the UK, it's approaching 20%. So there is inflation all over the world, and here they're still trying to slow conditions down because the job market is still very tight.
So the idea that the Fed thought that the inflation was transitory, there's a component that actually is. However, the core part of that is going to settle down in that 4 to 5% area, and they're not going to get it back down to their target of 2%. So you might get some relief in some aspects of inflation that what really would be textbook transitory, but you're not going to get it in the rest.
Yeah, but let me just jump in, Todd. I think I was pretty excited about the idea that the Fed was going to make a mistake, that they weren't reacting quick enough, and that it would become unanchored. And now they have admitted. They have come out and admitted that they did react too slowly, and they said they're going to learn from that, obviously. But when you look at what's happening and the fact that they're purposely trying to slow the economy down, that is the reason why the stock market reacted, because there's companies then, of course, that it's going to hurt their profit margin.
Absolutely. And so there's a trade-off. Do they fight inflation, or do they alleviate the risk of going into recession? Well, they made it clear in this speech that the fight is with inflation, that whether we go into recession is secondary. That ties in with earnings. And the reason I say that they see the inflation concern because they didn't bring up and didn't talk about the international scene. We know what's going on there. But you got productivity plunging, that's inflationary. You got a number of factors that are going to put a floor under inflation. That's why I say you may see a Fed that has to settle for 5% inflation or 4% inflation as much as they try to get it down to their target of 2%, and they'll still drive the economy into recession because don't forget they raised rates quarter, half, 75, and he's talking Friday about raising another 75 in September.